Mortgage rates are going up. What's going to happen? Hi everyone, my name is Mike Rennick. My guest today,
Don Bartolomucci.
welcome to another 2 Minutes with Mike. So we're into a unique period right now. We're used to seeing money available, mortgage rates, in the very low threes, and sometimes it was in the high twos.
That's right.
And those are very low numbers. In my advanced age, though, I remember when mortgages were traditionally 6, 7, 8, 9, even 10%.
When I started, we did loans at 18%.
So, yeah, I remember those days. I bought my first house then, and I actually ended up buying it on a land contract because of where the rates were. So, even today's rates that are hovering around 5-ish or so, and they change all the time, it seems like a big number, but from a historical perspective, it really
It's
isn't.
still really good. Still really good.
So there's still great opportunities. Now, where are rates going to go? Nobody knows for sure. Experts are suggesting they may tick upward a little bit. Is that true?
Yeah, you got to realize what's going on and what has happened, what has been going on for the past 3 years. The federal government has stepped in or had stepped in and started buying mortgage-backed securities, U.S. Treasuries, and they do that in the effort of making the supply of that product less, there be less supply, which obviously pushes prices up and yields down. So everyone, what you got to understand is pricing and yields, in other words, interest rates, work inversely with each other. So without getting into the weeds with this, the government, by stepping in and doing what they've been doing the last 3 years, they've artificially kept interest rates really, really crazy low, crazy low. Now they're stepping back, and as you know, you've heard in the news, they're raising discount. They're not buying mortgage-backed securities, U.S. Treasuries. Obviously, what's happening now, there's more bonds in the marketplace to purchase, which is causing prices to go which way now? Prices to go down because there's more of the product there and yields are going up.
So, like we said at the top of the video, traditionally this is still very cheap money. If someone were to get a mortgage today, and let's say rates came down back to the artificially low levels, they could just refinance, right?
That is true. We're actually recommending not paying points at this point, only because there is some forecasting that, in the coming year, maybe the end of this year, rates could soften up a little bit. Nobody has the crystal ball, but the point is, why pay points when you're not going to keep your mortgage for 5 years or longer? If you're going to refinance it, stay away from points.
So they really need to have a discussion with a great mortgage guy. Would you agree with that?
You need to really have some idea of where you're going, how long you're going to be in the property, how long you're going to keep this mortgage, to determine what products, when I say product, what mortgage product is best for you.
And Don, how would someone reach you?
941-2277-618.
And I'm Mike Rennick, 941-400-8735. Thanks for watching.